Good morning from Los Angeles. Alyssa Corum and Ed Carson here with your market update. Today we're taking a look at two stocks on the move on their quarterly earnings reports and another one that could see some interesting action after it reports after the close. So looking at the major indexes today, we are up across the board. The NASDAQ leading the gains, up about 0.75%. We also have the S&P 500 up 0.4%, and the Dow up 0.2%. And looking at the chart of the NASDAQ here, what would you say we're seeing with the action? Are we finally going to see that shift in tone?
Well, I mean, right now it's not big enough. It's a nice move. It's a rebound. I mean, the techs have been sort of hard hit in the last couple of days. I mean, just Apple rising a little bit makes a big difference for the NASDAQ because that after some pretty big losses. So it's something to watch for. You want to see a big move, like well over 1%. The bigger, the better. Higher volume than the prior day. That would be the kind of thing you'd see for a fall day. It is election day. Investors might be front running it. I mean, it ultimately may not matter that much how much it changes, but you know, that could affect things on Wednesday. So that might limit how much you want to stick your neck out either way, you know, going forward. But it's a positive action today.
All right, and we'll definitely keep an eye on that 200-day line, a key level to watch. And looking at a stock breaking out on earnings, we have Fabrinet, ticker is FN. Those shares are up almost 19% in massive volume here, gapping out of a base, some nice technical action. We have earnings up 23%, sales up 6%. Now, this is a turnaround from a string of quarterly declines and sales declines.
Yeah, I mean, the fundamentals aren't great on this company. It's a contract manufacturer in the optical space. It actually said that China tariffs are helping them because it's shifting manufacturing away from China, so maybe they're getting some more business. But you know, one thing is it's a powerful action, very nice. Maybe this is something to really look at. But it's also nice to see because it's another positive earnings report in the fiber optic space, which seems to be bouncing back after quite a bad stretch. Ciena, which is a gear maker, not just a component maker or a contract manufacturer, but Ciena broke out last week. You know, so that's acting well. So it's nice to see. You don't want to be the only one stock in a whole group breaking out. So even if this isn't the best one, it's nice to have sort of some friends, some sidekicks to join that rally.
That's right. The fiber optic space may be kicking it back into high gear, so we'll have to keep an eye out on that group. And we also want to take a look at Zebra Technologies, which was breaking out earlier today. It is now trading at near session lows below a buy point, but we do have earnings up 54% and sales acceleration up 17% versus 13% in the prior quarter there. But seeing Zebra come well off its highs, clearly some resistance there around that buy point. Yeah,
I mean, we have to keep in mind is that this is a stock market correction still. We're not, I know it's a nice day today, but that's also another reason to be cautious. Sometimes stocks have that big open and then quickly pull back, so that's always something investors should be careful of. You know, it makes barcodes, it makes, you know, like RFID chips, you know, I mean, barcode scanners, RFID chips, and some other asset tracking devices. It's been around for a while. RS line is looking strong.
That's right.
But it's, which is a positive showing how it's performing versus the S&P 500, but it is a late stage base. So that's, you know, those are a little riskier, a little less likely to work, a little less likely to be big winners. So it's just something, I mean, there have been plenty of late stage bases in 2018 that worked, at least for a while. But that is always something to watch for.
That's right. And when we're talking about late stage bases, we're looking at these chart patterns, and essentially the more bases that a stock forms and the more breakouts that it has and the bigger of a run that it has, that's when you see those late stage bases. So essentially when we're looking at historically, a lot of times after such a big run, they're more likely to fail. These stocks kind of run out of steam at this stage.
I mean, not only could their earnings growth have trouble, just, you know, traditionally when you think after a long run, there's ultimately sometimes a limit, but mutual funds have bought along the way up, and maybe they don't want to buy anymore.
Right.
And everybody's pretty positive on the stock. I mean, the stock's been going up and up and up, and so there's not a whole lot of new buyers, as opposed to when you can find early stage, people may not know about it. It has explosive growth, and, you know, so there's that psychology in that fact. I mean, late stage bases can work, but those are the reasons why.
That's right. Counting bases, very important. For more, check out our educational section at investors.com. It's the How to Invest tab. And we want to touch on one more stock before we leave today. It is Genomic health. And we're going to see earnings after the close here. It's forming a short consolidation, not technically a flat base here, doesn't quite fit that criteria, but it's seen some explosive growth here as far as earnings are concerned in recent quarters.
Yeah, it's expected to post its 5th straight quarter of triple-digit growth today. Yet another quarter of accelerating sales growth. I mean, sort of a glacial. I mean, this is an interesting company. They do genomic testing for cancers and really trying to find out like what kind of cancer it really is on a genetic level, because just because it's lung cancer or kidney cancer, there's different types out there, and so that really influences the treatment that you should get, and that really can improve the performance of what your treatment, when doctors are given chemo or this, so it's a really interesting field.
That's right. And for more on the interesting movers of the day, you can always check out investors.com, as well as our social media presence. We are on Facebook, YouTube, Instagram, and Twitter. Thank you all so much for joining us today, and we'll see you right back here tomorrow.